Hello, good evening. Mark, can you hear me?
I can hear you.
Okay, good. Thank you. Using this new microphone, so if it's working. For those who don't know me, good evening. My name is Kayla Joshua, and I am a financial services mentor slash strategist. So what I do is teach small business owners on how to make 100K in 90 days using my power platform. But tonight, I have a very, very special guest here, one of my dear friends slash business partners, Mr. Banks. How you doing tonight, sir?
I'm doing well. Thank you for having me. I appreciate the opportunity.
Thank you for coming. I have Mr. Banks here, and we are going to talk about a life insurance product called IULs. Now, for those who don't know, my bread and butter comes from taxes. So, taxes has been my go to as far as financial literacy and credit restoration. And I did just get licensed to do life insurance. But since I've been licensed, it's been so many different things that I've learned that I feel like as a community we weren't privy to and no one discussed or told us these things. So I wanted to bring on somebody who's a little bit more knowledgeable in this subject because I just do not bring anybody before you guys. So I wanted to bring on somebody who is a little bit more knowledgeable when it comes to this product in particular. So, my first question of the night is: have you ever wondered how you can protect your family's financial future while building wealth at the same time? If you ever thought about that, drop some ones in the chat. If you ever thought, like, what is a way I can protect my family's financial future and continue to build wealth? A lot of people don't know that even if you have a lot of money and you want to leave a legacy, from my personal experience and knowledge, most people lose it within the first 2 to 3 years if they're not the ones who actually earn that money. So, what if that ever been a question to you or you wanted to know how to do that, that's exactly what we're going to discuss tonight. Like I said, once again, my name is Kayla Joshua, and I am bringing upon somebody calling my phone. That's just so I'm bringing upon Mark. Like I say, he is a very awesome young man. Granted, I know I look good for my age, but he's younger than myself. But when I tell you that he is the bomb, he's very smart, especially in the industry of life insurance.
Thank you.
There hasn't been a time that I haven't had a question, and if I just needed a quick answer, he's been somebody I've been able to always go to and not have to wait for an answer. So I know he knows his stuff. Mark, if you can please let the viewers know a little bit about yourself.
Yeah. Well, first, thank you for having me on the show. This is a great opportunity. It's been a pleasure working with you last couple months. Um, yeah. So a little bit about me. I've been in the industry for about 4 years now, which for a lot of people that doesn't sound like a long time, but in the insurance industry, I'm a dinosaur pretty much, because it's a very tough industry to be in, and it's a tough industry to stay in, I would say. Um, but I am now the COO of the Jung Agency. So we are an agency. We work with life insurance companies, health insurance companies, retirement planning. So we do a very wide range of product offerings. My business partner, Stephen Jung, he's my mentor. Actually, he's been in the business for about 12 years now. So he's well versed. He was at Merrill Lynch. Um, a lot of high profile companies as well. So he's mentored me. I've learned a lot from him, and I'm just thankful. And yeah, I mean, I'm always willing to share. I've heard that your best ability is availability. So if I'm not always the most knowledgeable person, at least I'll be the most available person. So that's yeah, that's that's me in a nutshell.
That is so true. What I have learned, because I started off in network marketing with credit restoration, and most of the time, because I was like so quick to answer my clients' questions and things like that, they were more prone to trust me. It was like that know, like, and trust factor. They're like, hey, you know what? I know she's legit. I know she's, definitely her intention is to help me. So I really, I believe that. And like I said, and that's why, I'm going to stick with you and ride with you to the wheels fall off. Okay.
Right on.
have a couple of things I had questions or wanted to look at because I was looking into IULs, like I said myself. One of the key factors it says protection and security. So how IULs insurance provide financial protection and for your loved ones. So how does having an IUL protect your family as a whole? Because the whole thing is with everybody who's in my group, we're about financial wealth. So how do we leave that legacy for our family by using IUL as a tool? Or what is an IUL? Let's start there. What is an IUL?
So I'll kind of explain it, and I want to keep it as simple as possible, because this can be a very complex thing or a very simple thing.
Mhm.
So imagine there's one product that can solve the problem, the financial burdens caused by disability, severe or sudden illness, retirement income, and life insurance. So that product I'm talking about is the Index Universal Life Insurance Plan. If you can qualify, this is a product that will change the way that you look at life insurance. So, what is it exactly? The IUL, as we abbreviate it, is designed to provide permanent protection in terms of the death benefit attached to it. Meanwhile, your premium payments are in two parts. So, one part is going towards the cost of insurance, and one part is going towards savings. Unlike traditional permanent plans, the owner of the policy can participate in the upside of the index of their choice with zero downside risk. You're probably asking, what does any of that mean?
So hold on. So my understanding is you have this insurance policy like any other insurance policy, but this one is kind of tied to the stock market. So half of, or they're not going to say half, but a portion of the money is going to the market. The other portion is going to the insurance, right? So this
Right,
one tool. Now, you can't lose money in it. So
right,
you can only gain money. So when you pay your premium, so you'll however much you pay a month, towards your quote unquote insurance policy, it can go up. So you can get more than what you put in it, but you'll never lose that, correct?
right. So traditionally, permanent life insurance plans give you guaranteed 4 to 6% interest on the part of your premium that's going into savings. So no matter, it's not based upon the index, it's not based upon like a certain stock. It's just guaranteed they're going to give you that flat interest rate no matter what. The IUL has several interest crediting options based upon the index that you and your agent choose. So if the index has a down year or two, you won't lose money like a traditional investment account or a variable product. So anything that you're investing into the market. So there's no downside risk. If you have a variable product, a traditional 401k, the market goes down 30%, you lose 30% of your savings.
Oh wow.
This is not like that. There's a floor.
So meaning of index, so your money can either be in like NASDAQ or S&P 500. So do you choose where you want your money to go, or does the person who does your IUL policy choose that for you?
It's up to you. I always leave it up to my clients. So, I mean, people that follow stocks and follow the exchanges, they are a little bit more versed in that. But a lot of people just defer to an expert, which I highly recommend, because it's our job to constantly be tracking these things. Like there's indices like the BNP Paribas, or the Barclays, or these indices that not a lot of people are aware of. Um, so another thing I was going to say is, a lot of critics will say, if there's a floor, obviously there's some type of ceiling, right?
Hmm.
Um, so if you just choose the generic indexing options, there a lot of them are capped. So the cap might be 13%, which is still way better than a whole life insurance plan. You might
Hmm.
get 13% interest one year or 10%, whatever, however it works out. But that's capped. So if the market goes up 30%, you're only going to get 12 or 13%. But they're
That's
in
not a universal or a whole life policy.
that's with an IUL.
Okay.
So because there's a floor, um, often there is a ceiling. Now there are uncapped indexing options, and that's why you need an expert, and that's why you need someone who really knows what they're doing, because you could lose out on a lot of upside if your agent doesn't know about the different indexing strategies. Um,
Okay.
so it's very important to work with a professional. If you choose the S&P, S&P is a very safe bet. The 500 wealthiest companies, you know, pretty rest assured it's going to do well, year after year.
Mm-hmm.
But if it has a really good year, you're not going to participate in all the upside. So, but if it has a bad year, you know, the benefit being that you don't lose 30% of your retirement savings, which is obviously bad.
Right. Okay. The reason I had asked because some people don't even know the difference between like a basic term policy versus universal life. So that's why I was
Yeah.
trying to get you to go there because with the term policies there is so you're not gaining any interest in that policy, right?
Right. So term is so cheap because you're only paying for just the cost of insurance, right? So remember we talked about there's two part like your premium part of it goes towards cost of insurance, part of it goes towards your savings.
Hmm.
Term there's no saving aspect to it, so you're just paying for the cost of insurance, um, which is a good thing and a bad thing depending on the situation.
Hmm.
If you have a mortgage, something like that, where this isn't a retirement play, you're not using this as a retirement vehicle, and you're not really concerned about the final expenses. You're just worried, like, hey, if something happens to me early, unexpectedly, I want to make sure that my house is going to get paid off, my kids can go to college. That's what term is for, and you can get term for very cheap.
Hmm.
If you're young, you can get a $1 million term plan for like $30-$40 a month.
Hmm.
Um,
So how much is it average? So since this has a two-part functioning, so the IUL has the insurance aspect and it has the aspect of this connected to the index.
right.
So typically, I know you have to take in consideration age and things like that, but if you had somebody who had a term policy that was about $40 a month, is there a way that somebody can get an IUL for a similar rate, or would you automatically say it's going to be more expensive because we have this second pot where this money is going to?
Um, so not exactly. I mean, if you spent $40, you'll get more death benefit.
Mm-hmm.
But another reason why you want to work with a professional is that you can design the IUL in different ways. So
Mm-hmm.
you can make it accumulation focused, or you can make it death benefit focused.
Mm.
So you can allocate more of the money towards your death benefit or more of the money towards savings. So depending on how you want to go with it, it's not going to be the same coverage amount as a term, but you could get a higher, a decent amount of coverage for that. Um, but just really depends on what you're trying to get out of it.
So
Um,
whoever's doing your policy, you need to make sure you let them know then, hey, I'm looking more so for the long run, just in case I become disabled, I'm not able to take care of myself.
right,
I might need money for my kids in the future. I want to go this way, or I'm looking for something where to come, happen to me, God forbid. Then I will have more death benefits. Correct?
right, exactly.
Okay. And then also too, are you able to withdraw off of your IUL while you're still living?
So that is probably for me the best part. And
Mm-hmm.
I have this product. So this is a product that I actually purchased for myself. I stand behind it for this very reason.
Mm-hmm.
You can take money out of your policy tax free.
Wow.
Um,
Do you
so
have to wait a certain amount of time?
um, I mean, it depends on how the index is performing that you've chosen. If I mean it could be within months. I signed up a very young lady, young nurse. She was like 25. She paid maybe two or three payments, but she already had like $900 of savings.
Oh, wow.
Um, and she was paying like maybe $200 or $300 a month. But I mean, considering part of her premium is going towards insurance, she still had enough to accumulate enough to where she could start taking withdrawals if she wanted to. But the long term plan of it is to either build it up enough to where you can get a lump sum, purchase a home, take that money out tax free and purchase a home,
Mm-hmm.
or you can have a lifetime income rider. So very similar to an annuity, you can annuitize this product. So you can say at one point, hey, I'm going to pay on this IUL until I'm 65 or until I'm 70, and then the insurance company will tell you, hey, if you stop paying for right now or whatever, you're going to have this amount of lifetime income. So you'll get, a lifetime income stream.
So you can basically set it up to where you can have money for the rest of your life, depending on how much you pay. So you just tell them, hey, I want to pay ton, like you said, I'm 65 years old. They tell you how much you need to pay from your current age, and say when you get this age, you'll get a payment each month for X amount of money.
So yeah, there's the illustration that we show our clients. There's guaranteed amounts.
Hmm.
So the illustration is only going to show like with like 5% interest every year,
Right,
for like
which is the lowest.
which is the lowest. But if it really performs, which we're headed towards a bull market now, because like
Mhm.
I mean, once recession, they've been predicting the recession for a very long time. It doesn't seem like it's happening. So
Yeah, for like the last 3 years.
right, they've been talking about it for a very long time. Haven't seen it,
Yeah.
but but so eventually we're going to get back into a bull market. I mean, the GDP is doing really well, economy is doing really well, jobs are doing really well. So yeah, I mean, it's going to be a good strategy long term. And like I said, you can either take out a lump sum or turn it into a lifetime income stream. So it's up to you how you want to utilize it. A lot of people take that lump sum, buy an asset, an income generating asset, and then that asset can pay off that loan, or you don't have to pay that loan back, and they just take it out of your death benefit.
And then you can take the money tax free because it's a loan. You can't, yeah, pay taxes on the loan. So you
Right.
take out 200,000 out your IUL, then you don't have to worry about paying the taxes on it, right?
Nope.
So if that's the case, why do some people push you towards getting 401ks and IRAs as tax shelters? Because I'm in the tax field, and then like people like, oh, okay, I need to save money, so I'll put in an IRA. I can contribute up to 6,000 a year, or
So
I'll put the money in a 401k. Once it comes from my check, instead of saying, how come you won't take the same money and put in IUL?
so back after the Great Depression, Americans were very afraid to invest in the stock market,
Mm-hmm.
obviously because everyone lost all of their money. So the government came out, they designed 401ks and these different um, retirement strategies to get people to start investing back in companies again.
Mm-hmm.
Um, that's not a good thing for the individual.
Mm-hmm.
It's a great thing for the economy, but it's not a good thing for the individual, necessarily, because if you got an IUL, you would never pay taxes on your money.
Right. So the government don't like that.
They don't like that.
Right.
They need that money to fund programs. So
Mhm.
it's good for the economy that you're investing in these companies or whatever and what have you. It's good for that
Because
you're
when you take the
paying
money
taxes.
401k, you got to pay taxes on it because it was pre-tax. When you take the money out the IRA, once you get to age 59 and a half, then you got to start paying the taxes on it. So if you put in IUL, then
Never pay
the
taxes.
tax on it, and you have life insurance at the same time. So how come no one like really talks about this? Because I know some people in the life insurance industry, they call the IULs $1 million babies. They're like, if you get your child an IUL like while they're young, by the time they're like in their mid 20s or 30s, they're basically a millionaire. So how come more people aren't talking about this product?
Well, the product has come a long way. The original version of like universal life plans weren't as glamorous,
Mm-hmm.
so not a lot of people really know. Also, it takes a very experienced agent to sell this product.
Mm-hmm.
It's not like most of the time that you bump into an agent, it's just some person from some captive agency that has one or two products.
Miss Kim said, don't forget the RMD.
Um, Mandatory distributions.
Yes, talking about on the Robs.
Right.
Yeah, when you reach
Yeah.
that like age 62, and then you got to pay taxes on that. Yeah.
Yeah. So it's kind of a trap.
Hmm.
It's
Yeah,
kind of
everything I'm finding out is a
yeah.
trap. It's like they tell you to do this, then it's just to benefit this. And don't get me wrong, because there are fees associated with 401ks, there are fees with IRAs, and I'm pretty sure there are some fees with IULs as well.
Most IULs don't have fees.
Most of the some do, depending on I guess which one.
Depending, yeah, depending on the company. But so here's another kicker about the 401k.
Mm-hmm.
In most cases, you're paying a 1 or 2% management fee.
Right.
So let's say the product, the market goes down, you're down 30% of your portfolio, you're actually down 31 or 32%
because of the fees to manage it.
for the fee. Or if like it's a break even year, you're still down because you still got to pay your management fees.
Mm. So you losing. Whereas in IUL, you can't go beneath the floor.
Can't we? Yeah. The floor is
No
zero.
spending, and then it's the floor. So you basically gonna either get what you put in, or that's it. Plus, you still have the death benefit.
Right. So like with the 401k, Steve and I always talk about this. People don't think about the math. So like, let's say you have $100,000,
Mm-hmm.
you lose 30% of your account, you're down at 60%. So
Okay.
let's say the market goes back up 30%. What's 30% of 60? So
I don't know. I gotta do the math.
20 is 20,000. So
Uh-huh.
20,000 plus 60,000 is 80,000.
Mm-hmm.
So the market went down 30, went back up 30, but you're down overall 20,000.
I don't know what you just said, but it sounded like I
I'll,
lost a lot
I'll,
of money out
I'll,
of hundred
I'll,
thousand dollars.
I'll explain it again.
Okay, so you had
Yeah.
$100,000.
You have $100,000.
Okay, all right, all
Let's say your portfolio goes down 30%,
right.
right?
Okay,
So subtract 30%.
30,000. So now I got to take the 30,000 from 100,000. So now I have that left. Okay,
So you have 70,000,
right.
right?
Mm-hmm.
So now the market goes back up 30%, but it's
Okay,
30% of 70,000. So
right,
add
because you lost that 30,000.
right.
Mm-hmm.
So add 30% of 70,000 together.
Mm-hmm.
What is that going to
30,000
be?
times 30% is 21,000. Plus you had 70,000. So now
So,
I'm at 91,000.
so you've
So now
lost,
I'm still at a loss of 9,000.
right?
Okay.
So when you look at that, it's like
Because you only making the money off what you had left in there.
right.
And then we talking about 401ks versus if this was an IUL.
You're at a floor.
Yeah.
So the market goes down 30%, you lose nothing. You lose nothing.
Mm-hmm.
The market goes up
You gain.
15%, you gain.
Right.
It goes down again, you don't lose. It goes
Mhm.
back up again. So your trajectory is only up.
Yes, never.
It's never
Yeah. Now, why would somebody choose getting an IUL versus another type of policy? What like if you had, say, a young gentleman in your office, 20 years old, so you're gonna say he's kind of young. Why would you suggest him getting an IUL versus, say, a term policy or a whole life policy, universal life, etc.?
it just really depends on his situation.
Mm-hmm.
Um, I always recommend to get things in tandem, so it's not always just one product. But
Right.
if you had to
He had
choose,
to choose. Yeah.
yeah,
Let's say he had to choose and he can financially, it was financially feasible for him.
I would get the IUL. I mean, hands down, because it's going to protect. It's got the living benefit portion of it,
Mm-hmm.
so it's going to solve a lot of problems. If you have a heart attack, you get cancer, you have a stroke, you become disabled, you're going to get a lump sum of money to cover
Oh, wow.
that situation. It's going to protect you for your retirement. You're going to have retirement income. And then also, something happens to you unexpectedly, you still have a death benefit. So, with the 401k, if I pass away after only making, only putting in $5,000 into my 401k, all that's coming out is that 5,000 less whatever
I'm
I've
gonna say
lost.
then you gotta pay taxes on that too. So you're not even gonna get the 5,000.
Right. As opposed to I put 5,000 to my life insurance plan, but
Mm-hmm.
the death benefit on that plan was 200,000. So
Mm-hmm.
my family's going to get 200,000 instead of 5,000 less taxes.
Oh, wow. Dang, that's crazy.
I mean, it seems like so straightforward.
Mm-hmm.
Um, we work with a lot of like teachers, and their their situation is a little bit unique because they don't get Social Security.
Right.
They
They pay
get
into, like, well, Nevada, they pay into PERS.
yeah, right. So they don't know that a lot of times they're only going to get 30 or 40% of their highest annual salary. I mean, depending on how long they've
How
been
long
there.
they been in,
Yeah.
yeah.
Some even less than that. So when you break it down, it's like even in today's dollars, you couldn't live off of that. So a lot of them they need a supplemental account and they have to be very strategic with their money. So a lot of them end up going with an IUL.
Mm-hmm.
Um, One of our partners, National Life Group, they specialize in working with teachers, firefighters for that very reason, because they can't afford to invest their money in the stock market. If you have money to gamble, by all means,
Mm-hmm.
by all means, if go gamble in the stock market, do that. But if you're looking for a safe retirement vehicle, there's only one choice.
Mm.
Period.
Can you sell your IUL? Say you had it for a long time, you didn't. You was like, you know what, I can't afford the premiums, but I don't want to lose everything I put into it. Can you sell it to somebody else?
Um, there really wouldn't be. I mean, you could sell it to someone,
Mhm.
but I mean, you're gonna have either your cash value can start paying for your premiums, however you want to work it. I mean, there's a lot of ways.
Oh, that's what I was going to ask you. So,
Yeah,
yes, so you can't make your payments. I read that. So, because you have that cash value built up, then it can pay your premium for you, right?
right. And at some point, you can like just stop paying and just let it eat away the cash value.
Can you do that with any other policies?
You can do that with whole life, and that's it.
Not term.
Yeah, not
And
term.
that's only if it has enough cash value, right?
Right. Yeah. Because I've seen where people they stop paying. Some people forget that they have a life insurance plan, but the cash value's been paying on it for so long that it's still active. So, um, I mean that's a great benefit, and it's something that it's just a click of a button on the application. So
Mhm.
because your agent can either choose to not include that or include that, and that's something that you definitely want to make sure your agent includes.
Okay, so we need to make sure, like I said, you have somebody who actually knows what they're doing if you're getting this product, because you
Right.
want to let them know if you're looking more so for the death benefit side or the
Right.
accumulation.
Right.
And then if you want it to be able to default to, God forbid, something happen, I want it to be able to take from the cash value. You want to be able to tell your agent you want that as one of your options on the
Right.
IUL, right?
Yeah. Uh-huh.
All
Yeah.
right.
It's all about strategy. I mean, if you know what you're trying to get out of it, because
Mm-hmm.
I talk to some people, they're like, "Oh, I have life insurance." Yes, but this is, the way that we pitch it, it's this is an investment tool that has a death benefit attached to it.
Right.
So it's not
This
life
isn't
insurance.
just life
Yeah.
insurance, right?
Right.
This is, like you said, disability insurance, life insurance, a savings
All in
tool,
one.
investment tool with the stock market, all in one, like the whole shebang. So if you qualify for insurance, you definitely want to check and see, if I was to get an IUL, how much would that cost? Based on my income, of course.
Yeah, I mean, it'll depend, from company to company. Um, I mean, it really just depends, from company to company. I mean, the carriers that we work with, National Life Group, Mutual of Omaha, F&G, have some very competitive rates.
Mm-hmm.
And then it's going to come down to underwriting. Most cases, though, I mean, we've got express products, so most of them don't require physical. I mean,
I
you
was just
can,
about to ask that. Do you
yeah.
have to have a physical or blood test for this product?
If you want to get the best rate possible, well, and that is not always the case. If you want the chance of getting the best rate possible, you can go through a physical. But there's options where you're like, hey, I don't want to go through all that. You just pay the extra that they might charge you anyway if you have a physical, and just skip all that, and just get it done. So that is an option too.
And then, kind of on a transparent note, I'm personally not a marijuana smoker, but I know a lot of people are. And so, some companies, they really don't care if you smoke marijuana, some do. Have you ran across any error, like any problems with people trying to get an IUL, but they can't because they are marijuana smokers?
Depending on the carrier,
Mhm.
there are a couple of carriers I can think of off bat that if you openly admit to it or it's on your record, then
Yeah.
they will for sure decline you.
Mhm.
But there are some companies that don't even ask. So
Okay. So if you smoke weed out there, you still could probably get an IUL, okay? So don't knock it all the way out the park.
right,
You can still get insurance
yeah.
with a lot of different carriers. A lot of people are afraid to even apply for insurance because they feel like, oh, they're just going to deny me because of my medical history or I smoke or it is the end. But you have to take a chance.
Well, I've never turned a client away. Well, I take that back. I've turned an 86-year-old away. Anyone 85 and younger, I've been able to help in some form or fashion
Oh wow, that's
with a
awesome.
product. Yeah.
So if you don't have insurance out there, please don't, no matter who it is, it doesn't have to be Mark, it doesn't have to be myself, try to get some type of coverage. Even if you can't afford a lot of coverage, even if you have to do term or whole life policy universal, or if you want to do an IUL, by all means try to get some type of insurance quote or some type of coverage so that way you have something, because it's just insurance is just like such a taboo topic, especially in a black community. We were always like, oh, it's so janky to talk about death and blah blah blah, but what people fail to realize is other ethnicities are using insurance to leave a legacy for their family.
Yeah.
I'm sorry, but let's just call a thing a thing.
Right.
That's how their family is getting money. It's not like you banking off of your family dying. It's the fact that that we all promise one thing, and that's death. There's no if ands. There's nobody gonna live eternally. Nobody.
It's it's so crazy that there's such a taboo behind it because the richest families you can think of, JP Morgan Chase, all these big banks, they all have life insurance plans. These large companies, key employees, they have life insurance plans. It's a business move. It's not just death insurance. And that's why everyone's afraid of it because you think about death, but it's really not about that. It's more actually about life than death when you actually get down to the nitty gritty, and especially common modern products with living benefits. It's more about life. It's about the tax free earnings. Like that's what you really are trying to get out of this. And also, yeah, I mean, you do want to leave a legacy. I mean, how many GoFundmes do you see? It's like it's getting more and more frequent. Um, and a lot of times I'm like, man, I had someone really close to me recently pass away,
Mm,
and I asked the family, I was like, did he have life insurance? Nothing.
mm,
So
mm, mm.
everyone had to pull together. Like everyone had to pull money together and make it happen. And it wasn't like an extravagant thing, but still, it's like having to come out of pocket unexpectedly. I mean that it's like it's a tough situation to be in as a family member. It's it's a not the legacy that you want to leave, but it's difficult, and I've seen it happen too many times. And I just wish people would take 5 minutes, 10 minutes, sit down
That's
with an
all it
agent.
takes to get a quote. Yeah, definitely.
And if you don't even want to talk to someone, like, we've got links and things that we can send you and you can kind of shop yourself, but not something I recommend. I always recommend at least talking to an agent so they can, you know, guide you. But have that conversation. It's tough, it's weird, it's awkward, but like you got to get out of your comfort zone if you want to play ball. Like,
Right.
because people are playing a game. Like JP Morgan Chase, these banks, they're playing the game. They're getting tax free money while we're sitting here paying taxes on everything, getting getting waxed on 401ks. Like it's all like it's full circle
Mm,
because the things that we're afraid of and we don't ask about are the things that we most need. So just gotta ask the questions.
right. All right, thank you. I just really wanted to touch on that because I know me personally, I kind of feel bad when I see the GoFundMe's come across my social media or people asking to donate this or cash app that. But it's like, y'all know I offer life insurance. On top of life insurance, I offer funeral plan assistance. So, like, that's basically for people who can't qualify for life insurance. So, like, if you obese or you have I think diabetes, you can get that. It's not cash value, but it's going to still cover you and cover the cremation for up to 7 people for like $85 a month. Can't beat it. But it's not a policy, of course, because the people who offer that they don't have to be licensed, but it's something. So by you knowing, hey, I'm offering life insurance, you don't even have to pay a whole bunch of money for your kids. They can be riders on your insurance, like for another dollar, $2, $5. Seriously, like, and they don't take advantage of it, but then get mad when you say, I don't have nothing to donate to you. I don't have any money for your car wash. I don't have this and any other. When y'all could have had a free 100,000, 200,000, 300,000, half a million by paying like $35 a month. It's like the math ain't mapping. It's not making any sense to me. So it's like I don't
That's
know.
crazy.
what to do. That's why I wanted to have you on here today, because I'm to the point where I'm personally, I get frustrated because it's like you telling people all day long, I offer life insurance, I offer credit restoration or whatever, but not until we get in the bind, they say, "Oh, can you help me?"
It's too late.
Well, it's like, then now you the bad guy. Now you the bad
Right.
guy. So it's like, what? I don't know. Is
Yeah.
there anything about IU Wells that I didn't ask, or that you think that's really, informational that they need to know as well?
Um, I would just say it's in terms of qualification. That's one thing I didn't talk about.
Hmm.
It's going to be the same type of qualification as a term product. So it's something that you want to get while you're young and healthy. That's another thing. Another reason, that you want to get this done now, because everyone is one doctor's visit away from being not uninsurable, but not getting the product that they want.
Hmm.
Um, you know, I've helped out friends in the past, and you know they see the products that I'm talking about. Oh, Mark, I want that product, and then I have to break the news. It's like, no, it's
I
that's
can't
gonna
give
be
it to you.
you can't qualify, or it's gonna be too expensive because of your age or whatever the case may be. So get it done early. Get it for your kids. Like
Hmm.
$10 a month can go a long way for your kid. Imagine them having a life insurance plan that they can borrow from for college, for books, all those things, tax free. Like just imagine the responsibility, of you giving them their first bill, and it's something that they can directly benefit from. You
Hmm.
know, it's not like paying for Jordans or something. Like invest in them, and that's us as a community. We buy assets that don't appreciate.
Like, yeah,
But,
I'm not
like,
gonna go there, but yeah,
right,
you buy a lot of assets that don't appreciate. I
yeah,
would rather you buy property than to buy tennis shoes, and it just doesn't.
cars.
Yeah,
The worst. That's the worst. Cars are the worst investment. They like depreciate in value
as
immediately from the
soon as you
time
out the lot, yeah.
drive off the lot. It's crazy. So we want to buy all these things to look good for the here and now, but long term, IUL, I love this saying. It's not a get rich quick scheme, but it's a get rich for sure scheme. Like
Hmm.
I can look at my statement and know if I just pay my premium every month, I will be rich.
That's crazy.
I will be rich. Get with just with the guaranteed values, I will have wealth. I will have a large sum of money that I can purchase a home, something that will appreciate in value and continue to bring me value. So that's the only difference. It's not a scam. A lot of people are looking for that scam out there, and it's like, or they see life insurance agents and they're like, oh, life insurance is a scam. No, it's like this is real life. This is what the wealthiest people are doing. This is what Warren Buffett is doing. This is what JP Morgan Chase, like these the Rockefellers, that's what they did, and that's how they became rich. Like if you want to be like that, do what they did. It's just that simple.
It's something somebody has sent me, and the whole time they were talking about IULs. He was like, dang it, I wish I could find it. It's a friend of mine. He's been my friend for a very long time. And he's like, have you heard about the having your own banking system? What did he call it?
Infinite banking.
Yeah, he said, you heard of infinite banking? I was like, infinite banking? What is infinite banking? So I said, I know I'm not that privy to a lot of things. But I'm like, that's an IUL. I'm like, somebody's trying to get you to get an IUL. They just put a fancy name on. Like I said, infinite
Yeah.
banking, $1 million baby. No matter what it is, no matter how you chop or screw, you still an IUL.
I mean, you can do infinite banking with whole life too, because it does gain interest. But yeah, I mean that's the play. I mean, you are getting interest on your money every year, you know, guaranteed with a whole life insurance plan, and potentially pretty big upside with the IUL. So I mean, it's just it's way safer than anything you could do. Like it's way safer. There's guaranteed options too as well. So like if you're very risk adverse, like there's guarantees with it. So that's what I like. I got this product for myself. I believe in it. Um, I wouldn't sell anything to someone that if I haven't myself, at least you know, tried it out, looked into it, and tried it for myself.
Mm-hmm.
Someone put it's a highly regulated. Yes, yeah. The insurance, and like that's another thing. People are like always weary insurance agents.
Mm-hmm.
We are the most watched people. Like my information is everywhere. I could not commit a crime. Like they would find me before I got home because it's a very regulated. Like they know everything about us. When you're dealing with finances, money, like we go through a
You
lot
have
of
to even have you have to have insurance to cover you for that reason. The whole purpose of E&O insurance and stuff
right.
like that. So yeah, you have to make sure everything is on the up and up.
Always. So, and that's an important thing too. So you want to make sure that you're working with a licensed professional when you're working with them, and that they know what they're doing. If they've been in the industry for a while, that's another thing. A lot of agents don't make it um, because it is a tough industry. It's hard to convince people. A lot of people have what do they call that? Imposter syndrome.
Mhm.
It's like now I have my license, you know, now I had to convince people that I'm more knowledgeable, you
And
know.
that's my thing. I'm tired of having to, it's like I shouldn't have to beg you to protect yourself or if something were to happen to you or your kids. Another fellow life insurance agent, she had did a little reel or whatever. I saw it the other day, and she was saying how this person was like, oh, their main thing, I'm covered with my job. I'm covered with my job. Then they lose their job, and then they realize now, like you said, you 40, 50, 60 years old, you try to go get life insurance coverage and it's $1 million a month. And you're like, well, why is it so expensive? Because that was through your job. They were paying, a portion of your coverage, like just like medical, and you were paying the difference. So if you don't have an outside life insurance policy outside your job, you are not covered. I don't care who you are. No ifs, ands, buts about it. You can have insurance. Your husband can have an insurance policy. You need your own insurance policy outside of your employer. And if you're self-employed, there shouldn't even be a question. It shouldn't even be a question. You have to have some type of coverage because you are your own boss. And this group is geared toward entrepreneurs and all small businesses. So I wanted to make sure, we were getting this information today so that way you'll know how to protect yourself. If anyone want to reach me, my website is joinkayla.com. You can go on there and put in your information and schedule a time to get a life insurance quote. How do they go about reaching you, Mark?
You can go through our website, jungagency.com. That's JEUNG agency.com. Or you can email me, mark@jungagency.com. We'd love to help you out and see how we can help you.
All right. Somebody said they definitely have life insurance outside of their job. Oh, yeah. She worked with me at the welfare office for the state of Nevada. Yeah, you can't bank on that. Oh, Cobra. Somebody said they had Cobra expensive is very expensive. Yeah. When I left the bank and I went to work for welfare, I got Cobra insurance for 2 months. And to cover me for 2 months, it was about $2,500
Oh my God.
for 2 months. So you have to protect yourself. And, I'm not in the market of begging anybody, like I said, for coverage. I share the information as much as possible. I share it on my social media posts. I share it when I talk to people. I share it in a group. You have to want it for yourself. Your mindset has to change and know that, you deserve better and your family deserve better. The government is set up to give you enough to live off of and just get by. It's not set up for you to be rich off of because they're just taking money out of their pocket.
I couldn't have said it better myself. The game isn't designed to make you rich. It's just there to sustain you. And another thing, going back to work insurance, is
Mm-hmm.
that although some states are changing this now, but your work insurance doesn't usually have a cash accumulation portion to it as well. So you're not getting that savings. You're not going to be able to take advantage of the tax-free income in retirement. So it's like even if you keep it, most of the time it's just term insurance, which you're going to have to requalify for regardless of whether or not you can keep it. That term will expire and you will have to requalify at some point. So it's yeah, you want to get something outside of work. You want to get something. You want to get it on your children when they're very young. you want to take advantage of those things. Um, I mean, this obviously the cash savings, the living benefits, all those things. 'Cause imagine, you have a heart attack. How how will your life change at that point? You won't be able to,
Drastically.
you're not gonna be able to work. So, and I believe someone told me this, that eventually the job can fire you. If you can't come to work for a certain period of time, they can let
Right.
you go. They,
True.
they can they can let you go. So with that being said, I mean, you lose your job, you lost all of your benefits. Now you have no life insurance, no health insurance, none of
No
that,
income.
no income, and
And doesn't the employer get to write off how much they pay for your insurance? You don't get to write that off if you W-2.
right.
You don't get to write that off as a tax deduction. The employer does. And so now you lost your job, your income, everything. You had a heart attack. You really just screwed. And
Screwed.
no insurance policy because now you had a heart attack. Now it's going to make it harder. Just a domino effect.
Or you're disabled, like
Yeah.
so it get protection. It's
Yeah.
like it's like you wouldn't drive your car. Like I personally, I can't get in my car unless I know my insurance is active. Like it's just one of those things. So same deal. Like why would you walk outside without? Why would you continue to live without life insurance, knowing that?
Somebody said, now you so
Right,
now you're suicidal.
right. Now you
Now you really
suicidal.
not gonna get
Right,
covered. You like,
yeah, man.
that's
Because
crazy.
that story though, that's a very common
That's a
story.
main go to. I have
That's
insurance through my job.
right.
One of my business partners, she told her brother-in-law to get life insurance. He said, I got insurance through my job. She's like, but you need something outside of your job. She's not even licensed. He's like, I'll never leave my job. I'll never get fired. He had a new job in 2 weeks. 2 weeks. So never say never. But the moral of the story tonight, you guys, is get covered by any means. See how much it costs. It doesn't hurt to get a quote. It really doesn't, no matter what type of policy you get. And I just want to say thank you, Mark. Thank you so much for your time, because I like the way you break it down to people so people have understanding, because you do have to be very knowledgeable on how to offer this product. And so, I didn't know anybody any better to be able to explain it
Thank
so
you.
clearly as you did. And before you go, just give them your information one more time.
Oh yeah. So jungagency.com. That's JEUNG agency.com, or Mark at Jung Agency if you want to email me.
All right.
And thank you, Kayla. Appreciate
You're
the opportunity.
And once again, like I said, my name is Kayla Joshua, financial strategist of Knowledge Solutions. And you can inbox me or contact me on my website. Go to joinkayla.com. Because sometimes, people are scared and intimidated to ask questions because of lack of knowledge. But, closed mouth don't get fed. If you don't say what you don't know, because it's a lot of things I don't know. I'm not the expert in any and everything. Like that saying, you can't be the jack of all trades and the master of nothing. No one knows everything. You're so welcome, Janika. No one knows everything. So by all means, reach out. And if you have any questions, and even if I don't know the answer, I would definitely reach out to somebody that's more versed in the topic than myself, because we want to make sure that everybody in here is getting covered. Okay. All
Absolutely.
right. Thank you, Mark. You have a nice night. Thank
Thank you, Kayla.
you. All right. Good night.